Got a
Can you
mic
hear me
set.
now?
Yes, we hear you now. Excellent.
Thank you for having me, Spencer.
How are we doing this morning?
Excellent.
All right, let's start with the news from the other day. The deal with Caesars.
Yep.
Tell us about that. What exactly does this integration look like for FUBO?
So, well, the deal with Caesars is really just a multi-state market access deal, right? So you have to do these deals because all of the regulation is on a state-by-state basis. So, during our earnings call, we announced our market access deal with Casino Queen in Iowa. This is sort of an extension going into 2 more states. So our goal for 2021 was a minimum of 3 states. So here we are, right out of the gate.
So what? And that's sports betting is going live on FUBO when like Q4, right?
So our book is, so if you've been following us closely, November 10th we decided that we were going to get into the wagering space. We didn't know if we kept the optionality for ourselves to either do a partnership with a sports book or go it alone. And I recall Laura Martin asked me, she said, well, what do you think? And I said, it's a big project, as you guys know. 2022 seemed like the right time. And then, once we felt comfortable with our ability to execute, as you know, we know the sports space very well. We're a technology company. And I think we've demonstrated over the last 6 years that we move very quickly. We ended up with 2 very quick M&A transactions, 3 licenses before the first quarter's up. And now we're saying we're going to launch a sports book in fourth quarter. So well in advance of kind of what our plans were initially.
What was part of that though? Seeing what your competitors were doing. This DraftKings this deal was announced earlier this week as well. So did that factor into things? You felt like maybe you're falling behind?
Well, I would actually say it's quite the opposite. I've been saying for a year or more that we felt that we sit at the intersection of 3 mega trends, and people have said many times that this doesn't make any sense. And so the deal that you're referring to, in my opinion, validates what I have been saying for quite some time. In my opinion, I think we're actually ahead of the game because, to truly build the right experience, you can only do it under one technology platform. I believe that it's very difficult to have 2 different companies collaborate. That's not to say that it's impossible, but again, where you can't share data. The book may not know what the video customer is doing. The video customer doesn't know what the book is doing. This way, we think we can build an end-to-end solution. So, in my opinion, again, it's first of all, it's not a zero-sum game. The 2 companies you mentioned are great. I think Jason Robbins is an amazing guy. I know him, but like I said, it's not a zero-sum game. And you guys know this. Canby's report came out. I think it was last year. With the average customer has 4 books on their app on their phone. So. It's not either or. I think there's an opportunity for us. And, we have one of the largest sports packages online. So, but again, for me, that was validation.
What was up with this FuboBet.com thing? What was that about?
So first of all, I want to put a pin into this one. So notice on the earnings call, I mentioned Fubo Sportsbook many, many times, specifically, not FuboBet. That is a splash page that we put up November 30th of last year to test colors and to test name. And that page is FuboBet. And notice I've been talking about Fubo Sportsbook. So we came to the conclusion in January after multiple tests around that page that colors and the word bet is probably not the best thing. And Sportsbook made more sense. I think the situation that you're referring to, we were in the middle of earnings, and I think the question was, is this official? I think the miscommunication was this was not an official launch versus not being official. Now, that page has been up since November 30th. I have no clue who, what, when, where, why decided to put that page up. So,
okay, so official in the sense that, yes, it's from Fubo.
It's not an official launch.
But It's not the launch of anything new. Okay,
Right.
There was some weird stuff going on around that. So
which doesn't surprise me. Sometimes I get people calling me saying, I heard this, I saw that. I'm like, guys, our job is to deliver results, and we've raised guidance 3 times. We crushed our net additions for the fourth quarter relative to our peers, both traditional and virtual. We said we were going to do wagering. Track record that we move quickly, is once again proven with our ability to move quickly on the wagering side with these deals. So that's what we're focused on. And, we're very happy with our results, and I'm extremely bullish on the future of the industry and the business.
So one more thing before we move on the sports betting. When is the target date for when people will be able to wager directly on the FUBO platform?
Yeah, so we have a target quarter now. The target quarter is fourth quarter. The reason why we cannot give you a target date is because we just completed our deal. We closed, I think it was on Friday. The Victory team, who I'm super excited about, these guys are the real deal. They're flying in on Monday, so we'll have all of our prep meetings and strategy. And the good news is we bought a functionally, it's a functioning sports book, right? So it's just pre-revenue, which is exactly how we like it, because it gives us an opportunity to actually further develop it in a way that we want, that makes sense for our video product. So fourth quarter is what I can tell you. That's a pull forward from what we've been saying, which I think was end of December, potentially first quarter 2022. That's good news. And as we get closer to fourth quarter, we'll obviously provide you more clarity around that. So, but again, we're moving very quickly. You have to go through regulation. You have to actually submit your app to the regulators, so that they have to take it through like a 6 or 7 week process. So that's the reason why it's difficult for us at the moment to say what is that exact date. But I do anticipate sometime end of second quarter or early third quarter, we'll probably have a more definitive timeline.
Moving on to other areas of the business, your subscriber growth grew a lot last year. Your revenue grew a lot, but your losses widened as well a lot. Is profitability, is narrowing those losses a priority right now? And if so, how do you do that?
Yeah. So I want to be clear that I'm answering the question. Are you referring to the $570 million or the $2.42 negative $2.42?
Yes, that's what I'm referring to, the negative EPS.
Yeah. So this is one of the things around our business that it's important for me to meet with people like you and communicate, because you have to be very careful. You have to look at the details of our financials. Most of that loss is actually based on a revaluation of warrants. So these are a lot of non-cash items. We took an impairment on FaceBank assets. We wrote down $250 million or so. Again, you can kind of go through the filings. So, and then there was about, if I'm not mistaken, about $50 million of stock-based compensation. So the losses are not as excessive as it looks, based on the way we look at it. So
right. That was a big chunk, but that didn't account for all the losses, right?
No, of course. Look, let's be clear, gentlemen. This is a 6-year-old company. It's not Roku. It's not 20 years old. It's not Netflix at 24 years old. It's not Spotify. This is a company that is moving quickly, that has been very efficient to date. The actual cash burn rate, I believe, was somewhere around 200 or below $200 million. So, to get in a business like this, and you guys know how expensive the streaming world is, we have done an amazing job getting this business up and running, with very limited capital. We've been excellent stewards of capital for our shareholders. And, look at the way we've approached wagering. There's no $300 million M&A transaction with significant integration risk. We do things in a way that we think is controlled, minimizing risk, and allowing us to move very quickly and do it in a way that allows us to continue to A/B test and iterate, which is which is our playbook.
As far as your subscriber growth, revenue, almost half of that for last year came during the fourth quarter, which was also when we had this like once in a lifetime sports calendar, right? Because all these sports that had to stop during the pandemic, and they all came back at the same time. So how do you see that going forward? Because that was almost half your revenue last year, and we're never going to get that situation ever again. Okay, so let's just be clear what we're saying. This was the commentary around Q3, not Q4. The commentary around Q3 was there were no sports through June, right? Correct me if I'm wrong. Yeah.
And then Q3 was this massive quarter of all these leagues, the NBA, the NHL, the NFL, all coming back at once. And I think the narrative around that quarter was, okay, you had an awesome quarter, and it's not going to happen again because it's just a once in a lifetime situation, as you just described. However, let's fast forward to Q4, and I can just walk you through the numbers. Ad sales revenue went from $7 and change to $8.47. That was up significantly. Contribution margin normalized for Q3 was about 10.5%. We finished the year with 11.7% contribution margin, which will ultimately be our gross profit once we get through the minimum guarantees, which I believe are some point in June or July. And that's why we use that adjusted contribution margin. So when we flip it to gross profit margin, you can actually look at the historicals on an apples to apples basis, where it's just straight variable. And then when you look at the subscriber net additions, I mean, this is a very, very important point, right? Buying stocks and looking at companies is about looking forward, right? Not backwards, right? Our job is to extrapolate and build. And so what I'm very excited about is that special quarter that you're talking about, Q3. We actually netted about 11% of net additions from the virtual MVPD space. And in Q4, that number was actually 18%. Okay, so if you're saying we benefited, not you, if the pundits are saying we benefited, well, and many of them are saying that we have the same package, or which we don't, but let's just say we do, then why didn't everyone benefit the same way? So what we've established ourselves as a true sports player, that is underscored by our net additions for the fourth quarter. It's underscored by our ability to raise prices, because we raised prices to $65, just like everybody else. And we had the same sports calendar and benefited the same way as everyone else. So that should tell you that we are actually executing very well. And that's why I'm extremely bullish going into 2021.
I think Joel had a question. Joel? Oh, wait, I muted you. Sorry, Joel. 1 second. There we go.
We're on the line with David Gandler. Oh, I didn't say Gambler there. FUBO CEO.
Well, now you say Gambler now, right?
Sorry, man. I'm sorry.
Betting space. So.
My bad. The FUBO CEO joining us here on Benzinga's PreMarket Prep show, a little extended show. David, I can't help think about the circumstances over the last year and the pandemic, correct? I know it hurt your business as far as, having the sporting events, but isn't there a boon to the online gaming just from the fact that, people can't go to games and, and spend the time and tailgating and doing everything. And I know it's impossible to predict when that's going to happen again. But do you see, that possibly having a negative effect on your business when people start, returning to stadiums? Because I just, for me, I mean, I go and I cheer for my team. I can't see there being on the game and being on the phone and gambling.
I know.
Talk about how the pandemic, how you adjusted, and then also moving forward.
Okay, so let me unpack this for you. I think this is a great question because are you a Yankees fan? Are you in New York, or where are you based?
I'm a Yankees fan. Joel's not, but I am.
Okay, so let's play some trivia here. How many seats are in Yankee Stadium? 40,000.
Around 50, maybe high 40s.
Okay. So how many people, Joel, this is not a trick question. How many people across the United States can you jam into Yankee Stadium 120 days or 120 games? Like, you're only going to go see 1 or 2 games a season. I don't think you're the guy that's going to go watch 80 games or 90 games in a season. So my point is that you're still going to need access to your games, and you're going to want to watch it on your smart TV. And so the only thing that I believe will happen is that when you go to that game, I've got an opportunity to actually allow you in one interface to continue to place bets, to do prop betting, to think about micro markets. And by the way, Spencer, to your point about why it's important, to my point about why it's important to do both of these things under one roof. Think about, something that's going to be big very soon is the micro markets, right? Betting, prop betting. Think about when you know what people are watching and you know what kind of bets they make, and now you can create your own markets, specific and unique to what's happening in your ecosystem, right? So there is a huge opportunity to differentiate here. And I think when stadiums open up, it's actually going to create more value, because I think what the pandemic has done for sports is that you kind of been living this life where you're at home, you're taking care of your kids, you're doing all these house chores and you're trying to do your job. And you kind of sort of forget that there are sports out there, right? Because you're missing that sort of your normal day where you go to work, you've got weekends. And it seems like last year was just one long, long day. And I think that once things normalize, I think you'll start to see improvements in engagement around sports. Now, last thing I'm going to mention is, and I think, Joel, you said, tell me about going forward. Look, our numbers in our viewership hours in Q3 were about 121. You saw us announce 127 hours of viewership in Q4. And, I'm very happy to say that, when I look at January numbers, they're starting to creep up above 130 hours. So, again, that's not to say where the quarter ends, but to me, I'm very comfortable that while you do have a pandemic, I think people are going to be splitting their time and using their time differently. But I do not believe that they'll stop watching the amount of television that they have been watching, at least with FUBO. That's not evident to me in the data that I've seen, at least in the early indication.
Okay, one other quick question for you. This is kind of like a sore spot in my heart, because were you ever familiar with the Trade Sports platform?
No, I wasn't.
Okay, this is back in the early 2000s. I was a buddy of mine. We actually developed a betting platform.
Oh, wow.
Okay. For intra-game wagering.
Okay.
Do you guys offer anything like that? Or, it was a 0 to 100 probability and you can trade, and it'd be a basketball game and the shot would go up and everyone would pull their markets and then the shot would go in and it'd be a new market. Are you guys, for intra-game wagering, are you guys making any plans to enter that market?
So first of all, we are not yet regulated. I just want to make it clear. So there's a couple things. One, we are not yet regulated. Our press release that came out yesterday was we have a deal with Caesars subject to regulatory approval, so we have to go through that process. The whole point of this, Joel, is to actually do what you're saying, which is to take all of that data. This is not about who won the game. This is about, who's going to hit the foul shot, who's going to score the penalty kick. Is he going to pass more than 200 yards today? Is he going to throw an interception? That's the kind of stuff that I think is going to create that level of engagement to further driving retention. But the more you watch, the more advertising revenue. So for me, this was a very natural play for our video product.
David, one more. I don't want to keep it too much longer, but there's been a lot of bearish criticism of FUBO, whether it's from Rich Greenfield or from Kerrysdale Capital. What don't the bears understand about FUBO?
So, well, let's just lay out the facts. You just mentioned some of these reports. I try not to read them because, my job is to focus on strategy and focus on the business. Some of the things that I've heard, I don't know if it's true, you guys can keep me honest, is that, I've heard things like their downloads collapsed in December. I mean, some of this stuff is actually just fake, and it's not even sourced. And, my job, again, is to deliver results. Guidance increased 3 times in 3 quarters, hitting all the numbers that we talked about. We went through a roadshow. We delivered on everything we said we would. And that's why analysts that are covering it, are I don't want to say super optimistic, but it seems from what I've read is they're optimistic. Obviously not as optimistic as I am. And I think that there's a lack of understanding in the business. And I honestly don't think there's anything that we can do to get some people to change their minds. I think you guys know that. So we only focus on what we can control. And, if investors believe that there's an opportunity here, that's their call.
And our chat is asking us, how do we get Benzinga on FUBO? That's from our chat.
Well, yeah, you have an in, right? So I think, look, as I always say, there are capacity limits in the virtual world. Yeah. So, if you guys send me a T-shirt, that I can share with the team, not for me. I'd like to, position you guys as sort of, the leaders in the space, and we'll get you in front of the licensing team.
David Gandler is the CEO of FUBO. We appreciate your time this morning. Thanks a lot.
No, thank you, gentlemen. Great questions. Have a good one.
Appreciate it. All right. That was a fun, extended show.